Since we launched the company, we've been delivering about 10% annualized net returns to investors. So pretty strong risk-adjusted returns as well, and helping fellow Canadians consolidating their debt.
We use AI-driven technologies to streamline and automate that underwriting process. So it allows us to price these loans so that people are getting fair rates that are right for them.
All right, everyone. I am Ashoka Maimona. I'm the host of today's interview on behalf of Smarter Loans. Our guests today are Marc-Antoine Caya and Joseph Buaron, the co-founders of goPeer, which is a made-in-Canada lending platform that essentially helps everyday Canadians lend and borrow from each other. I'm very excited for our chat today. I know our viewers are going to learn quite a bit from the two of you. So let's get started without further ado. If you guys can give our viewers a brief overview of goPeer. I mean, we're going to go more into the details, but just from the outset, perhaps talking about the mission, the vision, and the origin story.
Awesome. Thanks, Ashoka. It's great to meet you today. Yeah, the mission of goPeer, really, we're here to help people achieve financial freedom. We see ourselves as a financial wellness company. And Canada really needs a lot more options when it comes to offering fair financial products to individuals, to customers. And we identified a major gap between what banks offer and what non-banks lenders are offering in the near prime segment. So we really see ourselves as being an option for borrowers, for people looking to consolidate their loans, whether you have sort of a balance on your credit card that you're not able to pay down every month, or if you have various other loans that you're looking to consolidate into one lower payment option. That really is what we've built, a product that's geared towards that use case. And the way it works is that when you apply for a loan on goPeer, it's not a bank that's going to lend you money. It's not a big institution that's going to lend you money. It's a pool of individuals like you and I that will contribute small portions of that loan, and we pull it together in order to offer you a loan. And that structure allows us to offer terms that are a lot more responsible and fairer to borrowers.
So that's a great overview. And before we get into specifics about perhaps how goPeer works, what sets it apart from competitors, if there really are any other competitors doing exactly what you guys are doing, could we touch base about maybe specifically the two of you so viewers can know more about your own professional entrepreneurial journeys, how you got into the lending business, how you guys met, what sort of prompted you to fill this perhaps gap in the market and create goPeer?
There's two different things, what drove Mark and myself is very different, but then they align very nicely within goPeer. And for myself, it's really strongly driven from the technical side. What's always driven me is the way we can use technology to really better our lives, better humanity. And I felt that this was the perfect application where we can take technology to take a process that's been around thousands of years and create this new opportunity that just never existed within Canada here, where we're able to offer investors a better product with higher yield fixed income returns, at the same time offering borrowers lower rates. We have a lower cost of capital, and then this streamlined automated online process. And at the end of the day, it's like a win-win for both sides. And the beauty of it is that there's this social good for the investors. They're investing in their peers and their economy. For the borrowers, they're paying that interest back into their community rather to the big banks. So connecting that, as well as the awesome tech that we had to build to make this possible, is really what was really exciting and passionate for me in this model. But Mark has a great angle on his as well. So please.
Yeah, well, definitely echo what you said, Joseph. I think it was well said. On the investor side of the business, really, we're looking at democratizing new asset classes. It's very easy as an individual to invest in stocks and cryptos nowadays, but other asset classes are extremely difficult to access. And, the first thing you learn in finance class 101 is to build a diversified portfolio of stocks and bonds. But in reality, bonds don't trade on an exchange. They're just not accessible. So it was important for us to build an asset class or to structure it in a way that makes high yield, regular passive cash flow type of investment accessible to the everyday investors. And the way that we've built our platform, and as Joseph mentioned, is it's a win-win where we're offering passive income, high yielding investments to investors on the platform, while also offering a fair and very attractive unsecured loan option for borrowers who are on the other side of the platform. And we tied both together by some solid technology, and we're integrated with various partners in the ecosystem, which allow us to very accurately forecast the likelihood of default on a loan and precisely price those loans so that it's fair for the borrower. They're not overpaying in terms of interest rate, but also fair for investors so that they're appropriately compensated for the risk that they're taking.
No, that's great. And I mean, you've touched on the reasons why investors should choose GoPeer and, on the other side, borrowers. But let's specifically maybe talk about borrowers first before we talk about why peer-to-peer lending is a good investment opportunity. So for Canadian borrowers, viewers who are watching, why should they choose GoPeer?
There's actually quite a few reasons to go with goPeer. So the first, there are others that have this, but the first is like the very seamless online quick process. It just takes a few minutes to apply. You don't have to go into a bank. You don't have to provide paperwork. We use AI-driven technologies to streamline and automate that underwriting process. So it allows us to price these loans so that people are getting fair rates that are right for them. A lot of other lenders in the market, unfortunately, still use just like this bulk kind of approach where they have a rate that they offer. Doesn't matter where you are, how good you are, has to do with challenges in their underwriting models where they're not sure, so they charge a lot to everyone. But with our model where we look deeper into their credit and provide a price or a rate that's appropriate for them, it means that people are getting something that's a little bit more fair for them. And in most cases, it's a better rate and it's faster. So those are the main reasons why a borrower would want to choose us over others.
And these are personal loans, and you guys have been in the market for a few years now. What would you say, what does your typical customer look like?
I'd say that typically it's people with relatively good income and relatively good credit score also that come into our platform really to pay down their credit card balance that they, as life happens, you can build a balance on your credit card. It's not always easy to pay it down. And that really is the majority of the borrowers that we've been attracting are people, in a similar situation. So they come onto our platform, they use a GoPeer loan to pay down their credit card. And as such, they're able to save on interest rates because typically our rates are lower than credit cards. But they're also able to, they have a clear plan to pay it down. And additionally, it improves their credit score by lowering the revolving utilization rate on their credit file. That's the primary sort of type of borrowers that we see. And we also see, so the second category that we're seeing is mostly people with very good credit score that are looking to renovate their homes, that they come onto our platform for a home renovation loan.
I see. And, for both categories, what does a borrower need in order to qualify? And generally, how long does the process take for them to have the money in their hands?
The process is fairly quick. The underwriting is fully automated. We do have an underwriter that will verify, however, the file before approving the loan. So usually we ask for about 1 business days to get an answer. And then it can take 1 to 3 more days, depending on the loan size, to actually receive the funds. Sometimes can be a little bit longer, sometimes can be a little bit shorter, depending on the market dynamics.
Yeah, there's some of the minimum requirements, though. We are targeting near prime borrowers with credit scores of about 600 FICO score or above. Have to be 18, of course. They need to have some kind of stable income and employment, at least 15,000 annually. And besides that, the loans are between 1,000 to 25,000. And we have APRs from about 8% to 32% APR is what we offer with terms of 3 or 5 years.
All right, perfect. Is there anything else borrowers should be aware of before they check out the website, make a call to, if you have a toll-free number, anything borrowers should be mindful of before reaching out?
I'd say always do your research. Understand, I think the APR is an important thing to understand, your total cost of borrowing, and not just the monthly payments and the terms, but then also the flexibility, early repayments. That's a law in Canada that you can do that, but make sure you have the flexibility to accommodate your lifestyle and your financial position, because the loan should help you. It should not increase debt. It should help you get out of debt. It should help you solve a problem. So it's very important to make sure you're borrowing for the right reasons. And we do that as well when we're underwriting loans. We look for those things. If we think it's not healthy for someone, we won't approve it.
Yeah, no, that's fantastic. So we've covered borrowers. In terms of investors, perhaps you can sort of outline why peer-to-peer lending may be a good investment opportunity. How does it work? And why is it attractive?
It's a good investment opportunity, mostly because it's a good portfolio diversification opportunity. The returns on consumer credit are uncorrelated or have a very low correlation to stock markets. Since we launched the company, we've been delivering about 10% annualized net returns to investors. So pretty strong risk-adjusted returns as well. And lastly, there's a social component where you're actually helping people get out of debt faster and helping fellow Canadians consolidating their debt.
Hmm. I mean, it's almost, I would say, a form of perhaps socially responsible investing. Would you classify it as something along those lines?
Yes, absolutely. It resonates with everyone internally at goPeer and with a significant portion of our user base as well.
And I mean, we can talk about the industry sort of generally in a little bit, but in terms of sort of goPeer appearing on the scene when socially minded investing is really taking off, perhaps in the US more so than here, but it's really, I think, ramping up here as well. Is that sort of one of the precipice? I know we haven't touched on that in terms of what sort of led the two of you to, connect and say, this is a gap in the market. This is an opportunity where, we can really bridge the need for the borrowers. And I think this openness on part of investors to look for opportunities where they are investing in efforts that have that communal aspect or that social aspect. Again, not putting words into your mouth, but do you think that was sort of perhaps one of the motivations?
Absolutely. So when it comes to like positive social impact of the decisions we make, we're all starting to think more about that every day in our lives. It's becoming more top of mind. So of course, naturally that comes to when we're making investment decisions as well. We don't want to invest in businesses or solutions that are going to, pollute our earth or cause health issues. So investors are certainly looking for that, and goPeer is an excellent option for that because that money is going right back into that community. So it meets those social elements that people are looking for. Investors still care a lot about their returns. That's still probably number one, but it's great to see that more and more people are thinking about and talking about the social impact of those decisions. And that's what we all have to do across the board, not just when it comes to investing and borrowing, but in all the decisions that we make in our lives. Let's look for the better options out there that are good for us and the planet.
Hmm. No, definitely. And in terms of people who are potentially interested in becoming investors, what can you tell us about that? Where, can someone get started? What does it take to become an investor? What's the minimum investment amount that's required? Are there any qualifications that one may require in order to become an investor?
Really, the platform, from an investor's perspective, the platform is accessible to everyone. There's no minimum investment requirements. So we typically encourage people that are interested to do their research, to give us a call if they have any questions, and to get started with an amount they're comfortable with. What's really important is to build a diversified portfolio. So if you want to invest, say, $1,000, we would recommend against investing all that $1,000 in just one borrower loan, but rather we would encourage you to invest $10 to $20 per loan across 50 to 100 different borrowers. That really is by far the best way to maximize your return from a risk-adjusted perspective.
All right. Is there anything else the two of you want to touch on the investment side that you think our viewers should be mindful of?
Some of the things that we hear the most is people are interested in the asset class really for portfolio diversification purposes, but also because it provides a monthly cash flow. So the borrowers, they'll make a payment every month of capital plus interest, and that money flows back directly to the investor on a monthly basis. And those funds can either be reinvested. That's what we see most people do, to reinvest it and essentially earn compound interest. But you could also withdraw it and do whatever you want with the profit that you made on that investment.
Another relevant point to add to that is that there is a very low correlation to stocks and other markets. So it also benefits there when it comes to portfolio diversification.
Yeah, and right now is the time, to diversify your portfolio with all the volatility that we're seeing in the market. Building a diversified portfolio is precisely for use cases in macro environment like the ones we're seeing today.
Hmm. And I think that's a really good segue into sort of industry dynamics and the outlook on the economy. I know people have been saying that, it's been volatile and it continued to be volatile. Capital markets are slowing down, potential rumors of a recession, I think, ahead of us. But if we can just backtrack to when you launched goPeer, from that point to now, how would you say, specifically the personal lending industry, how has that changed in that time? And sort of what are some trends perhaps you're seeing in this market?
There's been some observations, I think. borrowers in general are becoming a little bit more aware of the options that are available. I mean, when we first started, it was at the very beginning of COVID, and there was more of a tendency to go into a bank branch to do things in person, to provide all that paperwork and, to wait weeks. So I think one of the trends fueled in large part by COVID is that people are trying to go online more, trying to find alternative, faster, more convenient ways of doing things. And that's becoming more and more of the expectation. So I'd say that's the most obvious trend that we're observing. There's also, more of a trend towards more specialized types of solutions for their needs. So again, like going back to what I was mentioning, where a lot of the lending models in the past were, flat rate, they would just kind of have this offer they would just throw to everyone. And now we're trying to lead and seeing a little bit more personalization and specialization that gives people the right kind of rates and products that's appropriate for them.
And I mean, when you first launched, you didn't see COVID on the horizon, but I think for many people in the lending industry, specifically the fintech lending industry, I think there has been a lot of ups and downs. But do you have any comments on how there was more of a demand, perhaps, for capital in the last couple of years, and with perhaps more in the business lending scene, but also the personal lending scene? But how have things been, since the start of 2022 for your clients?
Actually, I'd say largely like related to COVID, there was a lot of uncertainty at the beginning. A lot of companies got, very nervous about how to handle that situation that was emerging. And some people kind of slowed down, took more cautionary approaches to it. But then ultimately, it actually had a positive impact on our industry, despite it, being a horrible thing. It had a good impact on our industry because defaults actually stayed steady, and a large of that has to do with all of the government aid that came into it. And that prevented people from having to go to those desperate measures, such as bankruptcies. But it also drew more people online as well, so away from the retail. So that may have hurt some of the retail traditional lenders, but it kind of helped where, us on our side being all digital and online.
All right. And in terms of, I mean, we talked about the flexibility that GoPeer offers and the speed and the fairness aspect that you touched on, Joseph. How much room would you say is there left to really improve, this market for borrowers? Let's say from a tech perspective, because there have been, I think, a lot of leaps and bounds in terms of changes in the last few years. What is left to make things even faster, more fair? What are your thoughts on that?
Oh, there's so much. I mean, we've done a lot, but it's like a tip of the iceberg compared to what we see us being able to do in the future, which is driven a lot by new technologies, AI, and the learning that we've accumulated over time as well. So, and we're continuously innovating too. We're launching new improvements to the borrower product all the time. And there's a lot more in the roadmap as well that we see coming. So, yeah, I think, from where we are today and where we would be in a few years from now, it's going to be a, completely different picture as well. It's just always going to be getting better and improving.
Okay. And I want to ask specifically about changes coming up for GoPeer, but if you want to touch on, some of the changes you see on the horizon that may, sort of unfold.
Driven by technology, I would say more advanced specialized AI decisioning and more real-time approvals, real-time disbursements. So getting money to people faster. And then the other thing is that with the additional data and intelligence, even more precise rates, identifying essentially what the risk is in lending and giving those appropriate rates. We want everything to be fully automatic, and we want it to always be fair and convenient and simple. So there's so many things that we could do to improve on those fronts.
And specifically about GoPeer, what's next for the team? What's next for the two of you? Do you want to share any, upcoming announcements or updates?
But we have a lot in store, and we're actually working on a few exciting things. We're growing the team as well. We don't have anything to announce right now, however, but stay tuned because over the course of the summer, we'll be announcing a few new exciting features and products on the platform.
Yeah, can't wait. Lots happening.
All right, perfect. Is there anything else the two of you want to add that we didn't touch on that you want to highlight perhaps further or add to?
Other than that, we're always learning and growing, and we love to hear from feedback from our customers, from the industry, and call us, email us if you have questions, if you're considering our products, or if you have ideas. We'd love to hear from others. But in the meantime, we're very excited to continue innovating and leading in this space and solving these two key challenges within Canada, fixed income, private securities, as well as personal lending.
And on that note, where should borrowers, investors, interested individuals go to find out more about goPeer?
You can go on our website, you can give us a call. We've built a platform that is very intuitive and easy to use. So we get a lot of positive feedback from our clients on that front. But definitely, we have a very strong customer support team. You can send us an email or give us a call and expect an answer within the same day.
All right, perfect. And I also wanted to ask the two of you about your Chief Wellness Officer, Chloe. Can you let our viewers know about Chloe?
Yeah, she has a unique track record, currently sleeping on the job as always. But no, she's a great employee. She really, is an important part of the company and brings her very specific expertise, definitely helps us identify the best borrowers.
She has an excellent snoring sound in the background that's very comforting during most of our meetings as well.
I can imagine. I mean, for viewers who don't know who Chloe is, maybe you can let them know what Chloe is.
Chloe's a French bulldog, that has joined our team from the inception of the company.
That's delightful. I mean, the studies show that if you have dogs, there's like doggy days at workplaces. A lot of tech companies have those, and it's contributed to, I think, employee satisfaction. So to have a dog as the chief wellness officer, I think, is a fantastic initiative. So I look forward to learning more about goPeer in the coming months. And keep us updated because we'd love to know about upcoming announcements, and I'm sure our viewers as well. But it was a pleasure to get to know more about goPeer and the two of you. I mean, we didn't specifically talk about how the two of you met. I don't know if you want to talk about that, how the two of you met, and sort of what was the spark that led you to say, you know what, we need to co-found something because there's this gap in the market.
Yeah, actually, it's kind of funny how we met, and a little plug here for that Hacker Nest Toronto social event. It was actually at one of those meetups many years ago where the two of us met, and we're both there for similar objectives of, with entrepreneurship spirit, looking for opportunities. And we started chatting, and Mark told me about the idea that he had, and immediately I loved it. And, it kind of went from there. So it's kind of funny how that happened, but it was just the perfect timing at the right place, the right time.
That's fabulous. All right, gentlemen, it was lovely chatting.
Perfect. Okay. Thank you.
Thank you very much, Mashoka. It was great chatting with you today.
Same here. Thank you both.
Bye-bye.